Do you want to learn how to buy term and invest the difference in permanent cash value life insurance? Now, I know you probably heard of some companies that said buy term and invest the difference. But you see, some particular company, when they tell you to buy term and invest the difference, you're investing the difference where you're going to be taxed later on upon your distribution. Instead, what I do is that I teach you how to buy term insurance and invest the difference in permanent cash value life insurance. Now, you're probably wondering, why would I teach you to do such a thing? I want you to listen to why. When you buy term insurance, it's to make sure that you cover what's called your dime. This is a simple method that is used to tell you how much coverage is needed. So you want to make sure that you cover all your debts. You want to cover your income replacement for the next 10 years, the balance of your mortgage, and your kids' college educational planning. The reason why you do this is because if you was to die too soon, you want to make sure that you have enough money in place in coverage amount with a term insurance where the cost of insurance will be much lower for you because it's cheaper to get a lot more. So God forbid if you die too soon, you would make sure that you have enough money to cover all your debts, 10 years of your income, the balance of your mortgage, and your kids' college education will be taken care of. But what happens if you live too long? That's why you invest the difference and the rest of it in cash value life insurance. By you doing this, you're now in a position where you're able to get compounding interest. You're also in a position where you could get the growth. You're able to get the safety where it guarantees you never lose money when the market fluctuates. Unlike putting your money in these 401ks, IRAs, stocks, and mutual funds, when the market fluctuates, you lose money. When the market goes up, you make money. So it's kind of unpredictable. But within a cash value life insurance, they guarantee you to never lose money when the market fluctuates. It also gives you a lot of protection. So it means that even though you're able to get this life insurance, it protects you in the most important time when you need money the most. God forbid if you have any chronic, critical, or terminal illnesses, you are now having access to your death benefit while you're alive. And the greatest part about all this is the fact that you get what's called tax advantages. You see, due to the IRS tax code 7702 section A or 7702, you're able to get tax-free withdrawals and tax-free loans of your money. You also pass on your money to your families without paying no estate tax, tax-free. And when your money it grows at a tax-deferred income rate, which means that you pay no tax upon the gains. Unlike your stocks and mutual funds and your banks, anytime your money grows in those vehicles, you got to pay capital gains tax. Even real estate, when you sell a property, you got to pay capital gains tax as well. In your life insurance, you don't have to worry about that. So if you'd like to qualify and want to learn more, comment below or click the link in my bio. I'll see you there.